Finance Secretary TV Somanathan has spoken out, saying the stock market turmoil created by the rout in Adani Group shares is a storm in a teacup from a macroeconomic point of view, emphasizing that India's public financial system is robust. The senior-most bureaucrat in the Finance Ministry also said that movements in the stock market per se are not the government's concern and there are independent regulators to take necessary action. There's absolutely no concern from the point of view of financial stability, either for policyholders or for anyone holding shares in these institutions. The Secretary further said that the fluctuations in the stock market prices is not a concern and it's a universal phenomenon of all stock markets in all circumstances. Sakshi Batra joining us from the newsroom. Sakshi, Somanathan clearly saying that this is more about a particular group company rather than a larger macro problem. Just take us through some of those key comments coming in.
Absolutely, Abha, you're right. TV Somanathan did clarify that the government's concern is with really creating the right environment and protecting the investors at large by creating a friendly regulatory environment as well and making sure that there is transparency and that the market really functions well, making sure that the information asymmetry is also reduced. And he also said that the government also ensures that they have their own macroeconomic policies which are sound and therefore have a fundamentally strong system when it comes to capital markets as well. And towards this as well, we did hear the finance minister really talk about how the markets are well regulated and the Adani business empire, whether they have, the route that it has created is unlikely to have a larger impact on the stock markets and the investors at large. And this goes on to prove because we have seen a rebound in the stocks, some of them at least in today's trading session. Look at the kind of move that we did see on Adani Enterprises in the intraday level. 35% was the slide that we had seen, the worst ever intraday fall for Adani Enterprises in the morning. But what really happened after the Fitch report, which actually suggested that there is no immediate impact on the credit ratings of the Adani Group companies, that really somehow supported the sentiments on the positive side, and therefore we did see that move on the upside, and there was a rebound of 39% for Adani Enterprises from the 52-week low levels as well. Also for Adani Ports, the shares rebounded 25% from the 52-week low. The market cap for Adani Ports also reclaimed that 1 lakh crore rupees mark as well. So although the concerns still remain, the dust hasn't settled as of yet. But what this does suggest is that overall stock markets also, if you see, they closed at the day's high point, over 900 points of a rally for the Sensex. So they were able to isolate this incident of Adani Group at one point in time. Most of the experts who have been speaking throughout the trading session, they have mentioned that perhaps it will take a little more time for dust to settle down till we do get clarity on whether, the concerns of Hindenburg report have been able to put behind us. But going forward in the long term, some of the group companies do have very, very strong fundamentals, and therefore investors with very high risk appetite can actually look at these mouth-watering valuations to look at buying at these levels as well. We did see Adani Enterprises slipping to almost 1,070. That's almost 76% down from the all-time high levels as well. And perhaps that has also led to a lot of interest from the investors who have high risk appetite, who went ahead and bought those stock. And we did see in the last 2 hours the sharp move on the upside for both Adani Ports and this one, Adani Enterprises, and then the other acquisitions, ACC, Ambuja, all of them also inching up about 3 to 6% odd today.
All right, Sakshi, thanks for taking us through that.